Hi, Mitch Irwin with Bell Bank Mortgage. Today's topic is decree tripwires from a lending perspective, meaning things that end up in a divorce decree that I didn't know about when I first talked to the client that I wish I had known about. Over the years, I've assembled a list of things that are always kind of surprises that can have a big impact on someone's ability to get a loan that a lender would appreciate knowing up front. Number one, timeshares. No one ever brings that up in the first meeting, but they do have a maintenance fee or an association type of fee, or sometimes even a loan that we have to account for in the debt ratios. So have clients make sure they mention that to their lender if they have one of those and they're going to be getting divorced. Personal loans, a lot of times that's personal loans to family that they'll put into a balance sheet to kind of equalize assets. We have to determine if that's a real loan that someone's going to be paying back, how much that monthly payment is, what the balance is. If the balance will show up on the divorce decree or on the balance sheet, but if there isn't a payment in there, we have to assign a payment of 5% of that balance. I've had that blow up a deal before. On the other hand, if that family member is willing to write a gift letter and say that that debt is forgiven, then we can exclude it. So personal loans, determining if it's a real debt or not, is helpful. Inherited properties, I've seen that a little bit more often. You'll see it in cabins. Their mother passed away and left them the home, but they haven't sold it yet. They haven't rented it out yet. Even if it's paid for, we still have to count that tax and insurance obligation. So inherited properties, even if they're paid for, they can have some negative impact on qualifying depending on how much it is. Talked to a borrower last week that had 3 properties that the taxes and insurance between the 3 of them was like $1,500 a month. Now the reality is they've got money in an account, they're feeding that until they get them sold, but in the interim we have to count that as a liability. It's going to put a hold on her ability to refinance until those are done. So inherited properties, they should bring up right away when they're talking to a lender. Condition of a property. Now we do an appraisal on a lot of files, but sometimes we don't. And if the divorce decree is overly dramatic regarding the condition of a property, we have to determine if that's legitimate or not, if there's a health and safety code issue, or if it was just used to try to, downplay the value for the purposes of getting a divorce. So be very careful about the language that you put in a divorce decree. Kind of the same with income. Sometimes people overstate their income and sometimes they understate it. And too much one way or the other is going to raise an eyebrow with underwriting, where we have to see what are we missing, what's real. So these are the things that I would prefer to know about up front in a transaction when I'm working with a client before the divorce decree is entered, so we can plan for that and really vet if someone can refinance right away or if they can go buy a home, to know if any of these are going to be an issue. Hopefully that helps. Please let me know of any questions you might have. Have a great week.